let's talk about target date retirement funds and the one major flaw about them that I see in my eyes. Let's get to it. Hey, this is Matt from Let's Not Be Fools, the channel that gives you financial and other life advice a couple times a week. If you like what you see, please hit the subscribe button. I'd appreciate it. Let's get into this. A target date retirement fund is basically a mutual fund that invests in a certain mix of stocks and bonds and other investments based on a certain retirement target date of the person holding that fund. In fact, if your employer offers a 401k plan, you may have noticed a selection of target date retirement funds available in that plan. So let's take a look at some data from a real brokerage, a major brokerage. I've selected a few of their target date retirement funds and the asset allocations within those funds. So the target dates here are 2030, 2035, 2040, and 2045. That's the target at which the investors of that fund will be retiring on or about that year. So the idea of the fund is to hold more aggressive investments early on, and then as you approach your retirement age, they're going to move to a more conservative portfolio. So the 2030 target date retirement fund has a split between stocks and bonds of 72% stocks and 28% bonds. Okay, that's a generally good mix. 2035, you'll see they're a little more aggressive on the stocks. They hold 80% stocks, 20% bonds or other investments, short-term investments. In 2040, 87% stocks, 13% bonds or short-term investments. And then way out here in 2045, since that's a long way out, they're going to hold a lot more stocks. So they're going to have 90% mix of stocks and 10% mix of bonds. So looking at these allocations here, you'll see 2045 is still 25 years out into the future. But let's say in 5 years, this portfolio would probably start looking more like this. And then 5 years after that, it'd start looking more like this. As the retirement age got closer for those people holding that fund, the asset allocation will change more to these allocations, to lower stocks and higher in the bond area. So for investors that aren't comfortable picking their own mutual funds and bond funds and making up their own investment portfolio, they can actually turn to a target date retirement fund and just invest in one of those and let the managers of those funds decide what stocks and bonds to hold and how many and how long to hold those and when to sell them off. And they could just set it and forget it, right? And they could just sit back, contribute money to those investments, and have those target funds manage their money and bring them into a more conservative position as they get closer to retirement. Now, as promised, what is the major drawback of target date retirement funds? Well, to me, I think they're way too conservative. And that's my opinion, and I think others share it. But I think the amount of bonds that they tend to hold in these funds are way too high, even when they're relatively close to retirement. I think they're still too high. Let's say here at 2030, that's still 10 years out, but they're holding almost a third of the portfolio in bonds. I think that's way too conservative. Even out here going forward, 2040, 13% in bonds. There's no reason to have that many bonds when you have that much time frame between now and that year. I think you can make a lot more money investing in stocks and even just investing in an index fund 100% as opposed to splitting it up between 13 and 87%. And then way out here in 2045, still 10% in bonds for something that's 25 years out. Again, I think these are just way too high of bond holdings in any given year. And that's the pet peeve I have. That's my drawback. I think they're too conservative. But if you like to just invest and set it and forget it, then these funds may be for you. I like to be a little more aggressive, so I stay away from these, and I like to select mutual funds that are more aggressive. Basically, S&P 500 fund is a great one to have. I like those index funds. They're very low cost, and they give you the market return. Most funds don't even meet the market over year. So to get a market return year over year in an S&P 500 fund, you'll be doing just fine. So that's my 2 cents on target date retirement funds. I hope this was educational. If you like the channel, please subscribe. I would appreciate it. Oh no, subscription button is here. But I appreciate it, and have a great day.